One of the biggest Bitcoin mining firms, Core Scientific, has declared bankruptcy in the face of plummeting cryptocurrency prices and rocketing energy costs, making it the latest casualty of the current crypto winter. The company submitted a Chapter 11 bankruptcy petition in Texas on Wednesday. According to the statement, Core Scientific has assets between $1 and $10 billion and liabilities between $1 and $10 billion. Along with falling cryptocurrency prices and soaring mining energy costs, the company has blamed its bankruptcy on a $7 million outstanding debt from Celsius Network, a defunct cryptocurrency loan business. According to court documents, Core Scientific had just $4 million in liquid assets at the time of its bankruptcy petition and had incurred a net loss of $434.8 million for the 3 months ended September 30, 2022. The business had stated that declaring bankruptcy before the end of October is a possibility. Bitcoin and other proof-of-work coins are mined by Core Scientific, powering data centers throughout the nation that are crammed with highly specialized computers that crunch math problems in order to validate transactions and simultaneously issue new tokens is a process that costs a lot of money and electricity. When Core Scientific went public through a Special Purpose Acquisition Vehicle, or SPAC, in the middle of 2021, the business attained a record valuation of $4.3 billion. However, as of the close of trade on Tuesday, the company's market capitalization had decreased to $78 million, and its stock price had dropped by more than 98% over the previous year. In what looks to be a prepackaged bankruptcy, Core Scientific reached an agreement with some of its creditors. In a prepackaged bankruptcy, the debtor and its debtor come to some form of agreement before filing for bankruptcy. According to a press release from Core Scientific, the miner anticipates assistance from a few of the holders of its convertible notes in the form of 2 debtor-in-possession (DIP) arrangements totaling up to $75 million. It will benefit from this assistance as it navigates the bankruptcy process, which it plans to accomplish swiftly, according to the press release. At the end of the third quarter, the miner had $544 million in convertible notes outstanding. The mining business stated that holders of existing convertible notes will equitize their debt into a considerable majority of the common shares of the reconstituted company. According to the restructuring agreement, current common shareholders and other holders of general unsecured claims will also get considerable recovery in the form of reorganized common stock and warrants. In late October, the company issued its first bankruptcy warning and announced it would stop making some loan payments. This news caused its shares to drop by roughly 80% on Nasdaq. It stated once more in November that it might not have enough cash by the end of the year. Investment bank B. Riley put out a financing plan for $72 million last week, including $40 million in funding that would be provided soon, and with 0 contingencies. The remaining funds would be made accessible after the price of Bitcoin reached $18,500, though. $42 million owed by Core Scientific to the bank. Instead, Core Scientific anticipates concluding a deal that will give it $56 million in a DIP facility with a group that represents more than 50% of the holders of its convertible notes. According to the press statement from Wednesday, the noteholders have agreed to syndicate up to $19 million in fresh money DIP facility loans to all holders of convertible notes. These funds are anticipated to provide the necessary financing to effectuate the planned restructuring, facilitate the emergence from Chapter 11, and cover the fees and expenses of legal and financial advisors, the miner said. They will also be used to supplement ongoing cash generated from operations. According to the news announcement, Core Scientific's operations remain significantly cash flow positive on a debt-free basis. Core Scientific is one of several miners struggling to keep afloat as rising energy prices increase costs, while stubbornly low Bitcoin prices slash revenue. Compute North, another major firm in the space, filed for Chapter 11 bankruptcy in late September. Iris Energy, IREN, had to unplug about 72% of its computing power that was tied to just over $100 million of loans that it defaulted on. The loans were held by special-purpose non-recourse vehicles. In November, Argo Blockchain's ARBK deal to sell $27 million of equity to fund operations fell through and the company was subsequently downgraded by 2 analysts. Greenwich Generation, GRE, on Tuesday announced a debt restructuring deal with its lender NYDIG, but could still run out of cash in 2 months if it doesn't secure additional funding. Core Scientific has also been affected by the bankruptcy of lender Celsius Networks mining arm, one of its biggest clients, and lender BlockFi, to which it owes $54 million. Celsius Mining filed for Chapter 11 bankruptcy in July and in September sued Core Scientific, claiming that it violated automatic stay terms. Core Scientific claims Celsius owes it $5.2 million as of September 30. BlockFi filed for Chapter 11 bankruptcy protection in late November, one of many victims of crypto exchange FTX's implosion. Core Scientific was running 243,000 machines in its facilities as of the end of October, split between 14.4 exahash per second (AS) of Bitcoin self-mining hash rate, and 10 AS of hosted machines for other firms, according to the filing. That's about 10% of the global hash rate, which stands at around 243 AS as of the time of writing. The company went public in January 20 after merging with Power and Digital Infrastructure Acquisition in a special purpose acquisition company (SPAC) transaction. Shares of Core Scientific were down over 27% at $0.1519 during pre-market trading. Aside from Core Scientific, other crypto mining firms are also struggling amid the market downturn. Argo Blockchain, Iris Energy, and Greenwich Generation are among the more notable Bitcoin mining companies to face financial issues. This year has been one of the worst on record for the crypto sector, with over $1 trillion in value wiped out from the market. Rising interest rates as well as exacerbating worries of an economic downturn have further attributed to slumping prices. While the crypto market crash has eliminated key industry players such as crypto hedge fund Three Arrows Capital and Celsius, the biggest blow came after FTX, once the third largest crypto exchange in the world, filed for bankruptcy protection last month. As reported, Sam Bankman-Fried, the disgraced founder of FTX, was arrested in the Bahamas earlier this month after U.S. prosecutors formally filed criminal charges against him. The Southern District of New York has indicted SBF on 8 criminal charges including wire fraud and conspiracy by misusing customer funds. Separately, the Securities and Exchange Commission charged SBF with orchestrating a scheme to defraud equity investors in FTX. Thanks for watching.